On the markets now, Neil Wilson joins us from London. He's Chief Market Analyst at Markets.com. Good to have you back with us, Neil. Let's start with the US's threat of more tariffs on EU goods. How worried are markets about that?
Well, I think it's actually been quite a sanguine response from the markets today from those threat of tariffs. I think really it's seen perhaps as maybe fairly contained, and it relates to quite a specific case. It relates to this Airbus subsidy case. And although the EU it has signalled that it's going to respond, I think at the moment the markets are fairly sanguine. We've got I think the sense that maybe that whilst there could be a tit-for-tat battle on trade, last time in July, Jean-Claude Juncker went to Washington and secured a sort of reprieve for the EU. So I think at the moment markets are taking this fairly coolly. I think we'll just need to wait and see just how it progresses and whether we do see that sort of tit-for-tat and see it escalating. But at the present moment, it does rather seem that it seems fairly contained.
Okay, let's look at oil now, because prices are continuing to rally, as I mentioned. How high could they go, do you think?
Well, I've heard talk about $100 a barrel again, but I think that's a bit far-fetched. I think we could be looking at 80 maybe for Brent towards the middle of the year. We've seen a bit more speculative. The sort of speculative positioning is a bit more long, so traders are expecting more gains. And I think with the sort of sanctions on Iran and Venezuela, cuts by OPEC, and the prospect of this big OPEC meeting coming up in June, I think we could see some further gains for oil, and also, of course, the Libyan situation. If that does escalate, if we see some disruption to production and exports from Libya, then we could see further gains. But I think ultimately those gains will be capped by some more supply coming onto the market in the second half of the year, with OPEC and Russia signaling that, especially Russia signaling that it might be prepared to open the taps again after June, and with the sort of Permian basin supply constraints that we've had in the US, those are diminishing. By the second half of the year, we should see a lot more US crude on the international market.
Interesting. And just quickly, Neil, do you expect OPEC might review its supply cuts in light of this rally?
Well, I think it will make some members, as we've seen with the OPEC Plus group, but certainly some members of that group, Russia, keen to maybe open the taps just a bit more. But I think ultimately they'll need to stay the course for this one, because I think the other side of the equation, of course, is demand, and the demand growth picture is looking a bit weak. So I think if you consider the fact that demand is maybe just cooling a little bit as well, they'll probably need to stay the course. Otherwise, we could see oil flip back into sort of $50 a barrel type territory.
Okay, Neil Wilson in London, thank you as always. Now to other